as a pacing candle. A pin bar forms with a long upper or lower tail and a small body. The space between the open and close of the pin bar is known as the body. You know, sometimes a pin bar can have a noise. In fact, there are two types of pin bars, bearish pin bars or bullish pin bars. So let's start with the bullish pin bar. A bullish pin bar forms when prices closes higher of its open with a long tail below the body. When this pattern forms as a pacing candle in a demand zone, we simply draw the proximal line at the upper shadow and the distal line at the lower shadow. Look at this example of this bullish pin bar candlestick pattern. As you can see, we draw the proximal line at the upper shadow and the distal line at the lower shadow to get this potential demand zone. And if a pin bar doesn't have a noise, we can draw the proximal line at the close price of the candle. Let me now give you some real chart examples. This is the Euro USA dollar 1 hour chart. As you can see, this is a rally base, rally demand zone. The pacing candle is this bullish pin bar. So to draw the zone, we just draw a proximal line at the upper shadows and the distal line at the lower shadows. Look at another example. This is the Aussie JPY 1 hour chart. And this is a drop base rally demand zone. The pacing candle is this bullish pin bar. It is the last candle before this strong move. So to draw the demand zone, we simply draw the proximal line at the upper shadow and the distal line at the lower shadow to get this demand zone. And as you can see, when the market returned to test this zone, prices moved up strongly again. Look at another example. This is the USA dollar Canadian dollar daily chart. And this is a rally base, rally demand pattern. It is a continuation pattern. The pacing candle is this bullish pin bar. So we draw the proximal line at the upper shadow and the distal line at the lower shadow to get this demand zone. And as you can see, when the market returned to test this zone, prices moved up again. So let's now move to the bearish pin bar. The bearish pin bar is the opposite version of the bullish pin bar. A bearish pin bar forms when prices close lower of its open with a long tail above the body. When this pattern forms as a pacing candle in a supply zone, we draw the distal line at the upper shadow and the proximal line at the lower shadow. Let's look at some real chart examples. This is the Aussie JPY daily chart, and this is a rally base drop supply zone. This bearish pin bar is the pacing candle, so we draw the proximal line at the lower shadow and the distal line at the upper shadow to get this clear supply zone. When the market returned to test the zone, prices were strongly rejected, forming a nice bearish pin bar. Look at another example. This is the Aussie USA dollar 4 hour chart. As you can see, this is a rally base drop supply zone pattern. The pacing candle is this bearish pin bar. So to draw the supply zone, just draw the proximal line at the lower shadow and the distal line at the upper shadow. And as you can see, when the market returned to test this zone, prices were rejected and the market moved down strongly. You know, these patterns happen frequently in the market. So please do your homework. Open your chart and start looking for supply and demand zones with pin bars as pacing candles and train yourself to draw the zones.